Hello everyone, good afternoon and welcome to the room. Welcome to the PivotBoss monthly outlook. Yeah, how's it going, Algo Killer? Good to see you. Welcome and thank you for joining us here for the monthly market outlook. This is something I try to do every single month, usually on the first trading day of the month or the first, if it's a Friday then maybe I try to do it Monday or Tuesday of the next week. So we're here on the fifth trading day, or rather the 5th day of November, the second trading day of the month here. Man, I'm all behind here. Today's a Tuesday, so the third trading day. We've had a push to new highs here. What we're going to be looking at right now is several of the major futures contracts. Look at some year-end ideas on how these things could finish up the year, what to look for here. Also, we have several candidates that we'll be looking at. Some candidates that will be short candidates, some that will be long, some that are seasonality candidates, some that are longer term candidates that could be candidates that go into the end of the year and perhaps into Q1 as well. So we'll take a look at that right now. We'll go ahead and get started. Number one, we'll take a look at the ES right now on a higher time frame look right now. This is the daily time frame of the ES. One thing that's very clear is this market has developed a clear channel over the recent period of time here. So this channel right here kind of goes up like this. It's been within that channel for a while, and price is now trading near the upper end of that range. This is something similar to what we talked about last time. Here's that impulse high. We dropped down and sold off to this low. When we got above that high again, and we were at these highs, I mentioned, hey, we're above this high, and if we can not continue to establish acceptance above that high, if we fail, we will rotate back down toward the 200, and that's exactly what the market did here. Over here, the same type of thing happened again. We rotated back to the 200, and now here we are again, this time again above these highs here, and there is the potential to see another rotation back down, perhaps as low as the 2920s, somewhere in that zone. But for the most part, this market remains very bullish overall. The difference here is how strong the market is heading into the end of the year. Typically speaking, when the market has been this bullish already to begin the year, so here's the beginning of the year was way down here. When the market is this strong in the first part of the year like this, the last quarter tends to be strong as well. Additionally, you have this very clear compression pattern here that's broken to the upside, a very strong pattern, releasing that energy now to the upside. That could release quite a bit more upside price action, so a price discovery phase could continue to the upside, especially with the 8-period average providing support right here, providing support on the way up ever since the change of bias right there. A failed low led to an outside day up, a push through that level, and now that zone has been bid. You see the rising PIMAs now providing support from below. So if we were to pull back, that could still provide an opportunity for bulls to defend and stretch this thing even higher. So that's a couple of things that we'll be looking for here in the trading room heading into the end of the year. Are we going to see a near-term pullback from these highs? Because there's three ways to go. There is the very short-term pullback that gets you kind of back to the mean. So this is a reversion to the mean trade, where price gets too far away from the 8-period average and at some point has to snap back to it, right? We might be too far away from it. We may need to snap back to it. And that could be as deep as 47.68. That could happen anywhere between 1 and 5 days from now. It could be tomorrow. It could be, again, by the end of the week. This 47.68 also can continue to rise a little bit here. It could end up being, 52 or something by the time it hits it. So there could be a reversion to the mean. That reversion to the mean, given the uptrend, will need to be defended by bulls. So bulls would need to come in here and defend it for a continuation. If that occurs, this thing could be headed much, much higher into the end of the year. If this pullback fails and it cannot hold, that's where the failure can get pretty ugly. How far down do we go? Time will tell. Last time it sold off from these levels, it went down pretty fast in about 5 days. Last time in Q4, we sold off pretty heavily as well. So anyways, we will see how this plays out. But right now we are at a cycle high. We are at all-time highs. We remain within a very strong trend right now. But if this were to reject, this would be the spot to do it. The other thing is we had a failed high today. So this is a high that is above the previous session's high, and then now back below the previous session's midpoint. Again, that would be suggestive of more of a reversion to the mean in the days ahead. I have continued to say to the room, though, that this has been a very bullish chart, and so it's tough fading this thing. You don't really want to be caught fading it too much here, but this would be a spot to continue to watch at new highs above the previous month's high here. It's ripe for some sort of rejection. If this was going to be the spot to do it, then this is the one to watch. So continuing to watch this one here. One of them here that I wanted to tie into seasonality too is crude oil. We've talked about this one recently. This one has a very bearish Q4 in terms of seasonality. And so we talk about seasonality in terms of averages. So what's the average gain or loss for any given month, going back a year, 2 years, 5 years, 10 years, 20 years, and averaging that up, it'll give you a seasonality type of line here that you can follow. And typically speaking, when you go to Q4 here, which is basically right there, that's October, what you see in crude oil is you see this type of behavior. You see this thing just drop in most cases. This was last year, which was probably the most extreme down case of the recent 3 or 5 years. So if we take a look at seasonality here, we do that by going to chart mode and going to seasonality. I will then switch this to a percentage. And we're looking at a 5-year look back right now, just a 5-year look back. So right here, that's the first week of October, and there's the drop. So this is an average drop from +6 to -16. That's a drop of 10% on average over the last 5 years for crude oil. Right now we're trading a little bit against this seasonality, because again, if this is the peak, it usually drops. Right now that's the trough, and we've kind of pushed a little bit higher. It peaked a little bit up here on that Saudi news, which kind of disrupted the market there. But this is what could be ahead. But right now we're on the upside flow of that. So what I've mentioned before is that if the seasonality is going to play out, then perhaps on this bounce, if we see a significant rejection, that could be a sellable event that could lead us into an end-of-year move back down. That could take us back toward recent support lows, 50-50, 51, somewhere in that zone. Because right now, this market really hasn't had a whole lot of luck finding acceptance above the 57s. So if we take a look again right here, 57.28, that is the key range midpoint of this impulse range. You can see we've been trading inside that level. Here's the middle, 25 and 50. Very important zone right there. We could get stuck in this and remain stuck, but again, seasonality for crude oil suggests weakness. And we looked at a 5-year look back. We could look at 10. We could look at a 3. Each of those all show the same type of weakness, maybe to various degrees of intensity. With the way that this one dropped so heavily last year, probably the 3-year has more of a lean to the downside. But anyways, very bearish. So watching this right now, 57, very important, and still keeping an eye on this zone here, but nothing really to like about this right now. For those of you that know my style of analyzing a chart and engaging these charts, I like to look for an impulse move, an impulse sell-off where price gets that, finds a peak high or low, in this case a peak high, sells off until it can't find a low anymore, and then bounces. And then when it bounces back to the midpoint, and it does so rather expediently. It doesn't take very long to do it. It doesn't do this and then gets to the midpoint. It's a very quick process. That process is designed to create a new market, right? This is the new market now. Price will trade within that zone. Your upper 25 level, right? This is your lower 25 level. Here's your low right there. Your high is going to be up here. And that's your midpoint. And you can see how many times price tests this midpoint, at least in this chart, many times. At some point here, we will see expansion from this range, and we can use the size of this range to give us targets. But my preferred location is out here at the extremes of this range, out here, or say up here, right? It's usually at this high or at this low where you want to look for a rejection pattern like this, and then you want to fade it back to the middle. Fade it back to the middle. So this is not my preferred location for this chart right now, but seasonality tells us that more downside is likely ahead, although seasonality is not perfect. It's an average of price action. And so again, doesn't have to play out like that, but for certain commodities it's incredible how seasonality does tend to play out year over year. Alright, so let's take a look right now at gold futures. Gold futures here, this one has been holding in a range over the last 3 months. This is something we talked about in the trading room here recently. We have an inside value relationship this month. Those 3 lines right there, those 3 pink lines are the pivot range for the month. These 3 lines are inside last month's pivot range lines. That's called an inside value relationship, something I write about in my book, Secrets of a Pivot Boss. And that type of relationship can be very explosive. When you see it, it tends to suggest major volatility is likely coming, and that can also coincide with expansion, breakout behavior. So we are seeing that development here this month. We haven't seen expansion yet. We have seen a little bit of volatility, especially today, as it dropped all the way back to 1480. Just incredible decline today after failing to get above 1520. This one has been building out for 3 months now. Very similar to what it did back here. You had your initial rally, right? This big rally that takes you up. And then it went flat for about 3 or 4 months. And then it exploded higher again. And now it's gone flat for 3 months. This LVN has been firmly intact. That's 1465. That's 1375. That one's never been retested. Neither has this one. And value's way down here at 1280. So I mean, this thing is way off and running. At some point, perhaps we may need to see a retest down here at the LVN. But what I'll be watching for in gold is for another explosive move up. It looks like this pattern will recur yet again. You got this little mini, and now we could be headed much, much higher. 1460, 1465 is going to be very, very important from that perspective, and that could lead to major, major moves. So perhaps we get a flush event here, where we flush lower again tomorrow, take out this low, flush below the previous month's low here at the 1465s, and then reject. That could likely be the best time to get in for a continuation higher. So gold's going to continue to be one to watch here off the 1460 zone. I wanted to talk a little bit of Russell 2000 here. Russell 2000 has been fantastic. I'll just go back on a brief history real quick. Last year, we got the major push through this this 1620 level right there. And actually, let me delete that line and make it a pretty line here. So that's the 1620 level right there. Big time level, we had it, this key range in place, so we knew how to play it. We got some great moves off of here. But right here, this was the early failure right there in September that started to develop. And this is when we knew that we could see a return back to 1620. I mentioned a move back to 1620 is very likely, but if it breaks 1620, that's where things will get ugly. And when it broke 1620, it went back to the other side here and then flushed through that. I mean, this was about as big as it gets. 740 to 1240 basically. That's a massive, massive correction very quickly. Eventually, price rallied back, but once it got below 1620, it could never close back above that level. Here was the only time it got close. Maybe it did, maybe it got right on it, but it was very close to getting to that 1620 level and then turned down again. Here it's turned down, here it's turned down, and here we are again. So this market has been developing very nicely over the last 6 to 8 months within this trading range right here. It's a really, really good price distribution. I mean, for the most part, what you're looking to do is just fade those edges. Every time you see a rejection, look to fade the edge back to the opposite side. For those of you in the trading room, this was our long right here. This was the long idea. The entry was right there on that day. I missed the entry there, did not get in on it, so I kind of licking my wounds as this thing has rallied. I had this one and another one both lined up, but got scared away on the close of that day there, the way it closed. But the edge is what was important there. That was a deep shakeout, but it was the edge that was important, just like the edge up here has been important. Notice also, again, prices at 1620 we haven't even tested. Look at the LVN there. Big, beautiful D-shaped profile above value. So this is CVAH, composite value area high. Down here is CVAL, and that's CVPOC right there. So we're rejecting those areas yet again. And so this one looks like a great selling opportunity. RTY tends to be early, ahead of the ES and the NQ, for example. If the market's going to turn, it's likely going to see rejections a little bit earlier than the market. So at times we look to this one to be a leader. And if this one's showing early rejections up here, perhaps the market may be due some sort of a pullback pretty soon. So this is a great sell. I would say any pullback into about above 1600 and into 1605 could be a selling opportunity for a return back toward 1552s. That could be an easy return back down, or perhaps 1566, which is the FOMC key level. That could be an easy turn down. And it wouldn't surprise me to see a move that would materialize across the range as well. So right now it's at the edge. Now here's one thing to keep in mind about this idea. The moment that price closes through 1620, this idea is off the table. So if tomorrow we close through that zone and there's a huge rally, all right, that idea is done, and move on to the next one. So we're right at the edge. It either needs to go or it's not going to be a good one here. So on the heels of that, I did take a position here in IWM. This is a 160, January 160 puts. And, again, for this one, the idea is that, 160 is kind of like that 1600. This one has not closed above 160 since last October 2018. So I did get in on that one today. The goal behind that one is to see if we can get a continuation back toward value, right? Continue downward back toward value, say 154. That's a VPOC there. And then again, it wouldn't surprise me if we got across the range. So with this one right here, I'm in the 160, the January 160 puts. And same deal with this one. The moment we close above 160, I'm out. I'm out of the trade. As long as it can continue to close below 160, I'll stay in and give it some leeway. Even have the option to add back to that one if I need to, or add to it. but looking to see if this thing can turn around as well. Speaking of candidates that are also topping out or perhaps attempting to top out, IYT is another one. IYT is a candidate that can also, or it's one of those ETFs that can also lead the market or be a leading indicator to the market. And this was one of those candidates last year as well, where price got above the key range high. You can see the key range high here. Got right up there, and that's, you know, again in that September time frame where we talked about, hey, if this thing can't hold that key range high, it's going to go to that midpoint and then has a shot to go across the range to this low. Remember, our entry last year was on that day right there, and this thing just dropped. I think I took most of it by there, and I didn't have any on by the end, I don't believe. Did get long this, but you know, again, this was a great moving back and forth. But the 200 level is right there. That's 200, and when it broke 200 here on that day, we knew that we would likely see a big flush back down. 200 has been resistance here, resistance there, and here we are again here. Each time, this time it dropped all the way down to 177, 176. Over here it dropped all the way down to 155. From this time it was 175. Over here it got back to 175. Right here, I mean, just getting back to the HVM would be big. That's 187. And again, D-shaped profile. If it does pull back, 175 to 180 would be a great get by the end of the year. Again, I'm in this one right now. I'm in the 200, January 200 puts. So here's the 200. I got the January expiration, which is about 73 days to expiration. And I bought those puts when price was right at 200. So we were in the trading room this morning, and when price rallied up to 200, I said, hey, this is rare. We're sitting right at our 200 just like we were. I missed this time and didn't see it till the next day. We were right here when we saw it that day as well. We're right here when we saw it that day as well. Right there when it broke down for the first time. And so here we are again, and we'll see if it's another big move away from that zone. If not, then we know right away. Again, just like with the others, if this thing were to close above 200, I'll be out. Really, if it closes above 199.12, we'll know right away. But again, with January expiration, going to let it do its thing a little bit. And as long as it can stay below 200, I think it has a good shot to return back toward the mid-80s at the very, very least. So going to give this one, you know, some time, maybe a week to see where we're at. And if, you know, we haven't really budged a whole lot, but we're still below 200, we might be building for a bigger move. So we'll see. But I think it has a good shot to make a good move down. So that's IYT and IWM and RTY. Those three right there, very, very solid short candidates right now. Another short candidate here, since we're talking about short candidates, is CBRE. Now this one is a candidate that's a short candidate because it's a rejection at recent highs here, 56. If you're eagle-eyed, you'll see that earnings is tomorrow morning before the market opens. So this one's going to have fireworks right at the open. So it doesn't necessarily have to be a short candidate. It's a short candidate, came up on the short scan because we are at resistance, and we did throw off a rejection tail there. We have a very clear trading range down here with support, resistance. So naturally this would be a spot here to watch for perhaps a fade back to the 200 or back down to support. But this could be used tomorrow as kind of a bracket idea as well, because if earnings comes out and the market responds to it well, perhaps an open, say, above 56.60 would suggest a major rally, and this thing could tear off to the upside. So again, more of a bracket idea for a play right at the open. That is CBRE. So we got a candidate that can be engaged right away at the open tomorrow. We have IYT, IWM, and RTY, which are candidates that can be engaged on a short-term time frame as well, and in addition to a longer-term time frame. CL, watching that one for seasonality. Speaking of seasonality here, let's do another seasonality candidate. We're going to do Home Depot. Home Depot looks like it's ready for a buy the dip opportunity. It's coming into the part of the year that tends to have a great gain right into the beginning part of December usually. So if you look at this market right here, very clear uptrending market. It had this lower line here. Now it's intensified a bit. It's got this upper line like this. It's trending higher. Higher value relationship here on the pivot range. We've pulled back into the pivot range. Not quite showing huge bounce off of it, but not bad either. Here is the seasonality. Let's take a look right here. We're going to go to seasonality right here. Again, I'll bring this up and put a custom right there. We're looking at a 5-year chart right now. 5-year chart, and this is what you'll see right here. Right there, that's the last week of October, first week of November, and that's usually the pivot low, and then it rallies into the first week of December and into the end of the year. That's Home Depot. Right? That's a very reliable trend. Last year, it didn't work out that great. I still took the trade and still made money. But that's just because I got a lucky timing on a good exit when it popped in our favor real nicely. But wasn't as smooth as usual. But this has had a really good trend again for the year. It's intensified. It's hitting the pivot range. And right now it's pulling back right into that zone where it tends to be the buy the dip right before it tears off to the upside. So this one looks really good. Over here, again, that's a 5-year look. This tends to rally, call it 6.5 to 15. So that's about 9% move there on average there. If we take a look at, say, a 10-year look back, you can see right here, tends to bottom in the last week of October. That's about 9.5%. And then this thing rallied to 18%. So again, another 8.5% gain there for that one as well. If we look at, I mean, going back even farther, say 20-year wouldn't be preferred. I guess 20 years is such a long time ago. But for a stock like this that has seasonal trends that may be kind of locked in, here's your seasonal October low, and there's your end-of-year rally. This is a 20-year look back. We're looking 20 years. We look 10, 20. We started with 5. If you take a look at a 3-year look back, again, last year was not that great, and it was still buy at the end of this cycle, sell either at the beginning of December or at the end of the year. So that's the seasonality of Home Depot. If we take a look at, again, the regular chart here, you'll notice that this thing has pulled back from recent highs, found a strong low here at 230.27. That's right at the midpoint of the previous month's range, which is 233.24. Sorry, 230.56. And at some point here, we might be at a point here to buy it. Now remember, this trade takes you into the first week of December. If you want to hold it into the end of the year, it usually closes at around the same amount, but you've kind of wasted 3 weeks. So this is about a 3 to 4 week hold on this one. For Home Depot, again, depends on how you would like to play that out. It could be a good way to sell premium. For example, 235, you could sell 235 put credit spread, and by the end of this thing, it could be closing above 230 in the first week of December. So a couple of ways to go about that. could buy the 235 call out of the money right now and let it slingshot into the zone. 230 in the money calls also a good way to go as well. In the money pays better over time. Again, you always want to make sure you are ahead of earnings as well, and so that you don't get surprised. This one has earnings on the 19th, which could be really, really good for this stock. It could be what it needs to finish strong here the year. So Home Depot is on the long list, and it is a seasonality candidate, a buy the dip candidate this week, as it could turn out to be a great move. Now, here's the out for this one. For Home Depot, if it can't stay above 230, then you have to wait till it comes back to this low. So 230 is the midpoint of the previous month's range. You want price to stay above it. It could drop below it and then pop back above it, but that would be a trigger to entry. So if once you get into this thing, you don't want price to really close below 230, because that would suggest that it's likely coming back toward 222, 220. And then it could be an opportunity down here. So right now, again, 230 is going to be the level to watch on that one. Okay, so we've talked about some short-term swings, some seasonal swings. We talked about a one-day opportunity in CBRE. That could be coming up pretty soon. I wanted to talk about some longer-term stuff real quickly, something that could take us into the end of the year and perhaps even into the end of Q1. One of those is ATVI. I really, really like this one. For those of you that have kind of a longer-term focus or have some cash that you want to put to longer-term use, ATVI is one that could be pretty significant. If you look at this one, you'll see that price has developed a very clear line in the sand here at 58s. Before that, the clear line in the sand was 50. And then if you look right down here, you'll see this kind of rounded bottom or saucer bottom. When you add this right here, it looks like a cup and handle type of pattern. One of my favorite patterns, but my favorite all-time long-term pattern is this rounded bottom right here, especially when it develops for 6 months, because that is energy building accumulation phase right there. CVPOC shifts lower, it takes it bid, explodes through the 200-day average. It comes back and retests the 200-day with a strong reaction. That was the day we had it as a buy candidate. Actually, for the current run, we had it as a buy candidate much earlier than that. And the first day we had it as a buy candidate was after this rejection. We knew that any pullback could be a buying opportunity now to keep that low locked. But that was the bottom of the rounded bottom. That never really happens. So my entry actually came on that day right there, just for the current push, looking for a continuation that could take us into the end of the year. And so I'm trading January options here as well. Bought the January 55 calls. And the goal is that as long as this thing continues to hold above 52s and now 53s, I can let this one give it a little bit of room to run and see if it can make a move. It does have earnings later on this week. I believe Thursday is the day. Thursday, maybe after the market closes. Let's see. Yeah, Thursday after the market closes. So Thursday could be a big day, either in a good way or in a bad way. You never know how the market's going to react. But with this huge accumulation phase, this positive progress above the 200, steadily marking higher, it has this ascending pattern that's developing. All of that suggests an upside break and continuation. I'm banking on at least a gap fill. That would take you to about 63. So I'm looking to hold this into about mid-December and see if it can get to a gap fill. If it can do that, I'm happy with that trade, because that was designed to be kind of a year-end swing. But for those of you that have a longer focus as well, if you find your entry on this one at some point, not only do I think it can get to that quick gap fill at 63, but I think it has enough juice to maybe make a run for all-time highs back here, maybe a year out from now. this time next year we might be back at these levels. Who knows? Or maybe by the end of May we could have made a move and be back at those levels. So again, Thursday's going to be a big day here after the market closes, but I am in that trade right now, and again, we will see if it plays out to the upside. This is one right now that has some pretty deep, heavy pullbacks, just know that. So factor that into your strategy, but it tends to bounce back pretty nicely. We'll see again with the earnings here coming out. Do we get a favorable gap in our direction? We'll see. Okay, another one here is WBA. Now, I mentioned this one because it has a similar rounded bottom. It had a very explosive move here to begin the day. This one's been on our buy list since, what was it, this day? Had a big rounded bottom here that I found that we've had since that day as well. And it's continued to build out. And I mentioned before that if it can get above that 58 level right there, things can get very exciting. Yesterday it exploded through it. Today went much higher, got to 64.5 and filled the gap already. This one is like Activision in that this rounded bottom is significant. It's huge, and it has a lot of energy to really push price much higher. VPOC is way up above 81.36. Even with this big rejection here, you know, if on a pullback, if this thing can continue to hold, say 57s, that could be a huge continuation that could take you back towards 75, maybe into 81 again over the next 6 or 9 months, right? The duration it takes to build this long pattern right here is the amount of energy it could release in time duration down the road. So this is 1, 2, 3, 4, 5, 6, 7 months. We could have about 7 months of expansion. And already the first 3 trading days of this month have already been explosive. So it's gone nearly 10 points. Huge move. So this is one of those long-term candidates. Something that could end up returning back towards 75, perhaps as high as 81s. As long as it holds 57. Okay, ABT. ABT has been on a tear to the upside. Great trending behavior. If you look at the beginning of 2017 back here, price was at around 40 bucks, and from 40 bucks it has gone to 80 plus. Right now it's trading 82. Look at that trend line right there and how incredible it is. And right now we are currently sitting right at it as well. And again, with that line, we could be making a move off of it pretty soon. One thing I see right here is this kind of flag pattern right there. Remember, that's the trend line down here, which coincides very nicely with the 200-day, right? Also coincides with the LVN here. Look at today's rejection day, pretty big rejection day type of tail. Maybe that says, hey, this just failed, and now we're about to see expansion to the upside. This one's through earnings, so there's no real catalyst here until January. But man, if this thing is ready to get some explosive move to the upside, again, 3, 4, 5, 6 months out, this one could be an explosive candidate. Again, we talked about this one last year. Same thing. Started the month with 3 strong months up. Another buildup of energy and a continuation. So again, we will see if this builds up into a bigger move to come. So that's another long-term candidate. And lastly, as a long-term candidate, again, you have to mind your risk with something like this. This is $3.74 today. Immunogen, another big accumulation pattern, rounded bottom, big clear resistance here at around 350. VPOC shifted down and taken bid. Huge day up today where it's up 22% today alone. That has been a strong 3 days to begin the month. Taking price from 240, 245, 250 up to 374 today. big time move there out of this one. And again, you always have to be careful with these biotech type of stocks, but this thing right here with the rounded bottom, the break through the high, all of this right here, that could at the very least lead to a move back up here toward $6, the recent pivot high. So any retest of 3 could be a double potentially there. But I think that this has even more juice to perhaps go back up here to kind of these lows, 850-ish down the way. Again, this is a big time pattern that has taken a lot of time to develop. Big bullish breakout. If it can hold $3, I think it has 4 to 6 months, maybe more, of great trending behavior. So again, this is one of those ones that if you're fortunate enough to be able to get in a retest, say 325, then you can hold that as long as price remains above 3. As soon as it closes below 3, just cut it loose because it's probably going to fail in some way. But if this is it and this is the time, it won't surprise me to see this thing above $5, $6 very, very quickly. So that's another long-term candidate. Again, wanted to provide a little bit of a mix. ATVI, ABT, WBA, and IMGN are the longer-term candidates, 4-6 months out, something like that. We have the seasonal end-of-year candidates in HD and CL. We have kind of the short-term ideas like IYT, which can also turn into a year-end type of trade. So I'm in this one already and looking to see if we can get this thing rotating back the other way. Any close above midpoints or back against those key levels that I'm trading, again, would be an automatic exit for those. All right, everyone. Well, I'm going to go ahead and call it a session there. I want to say thank you all very, very much for joining me for the monthly market outlook for November 2019. A lot of great candidates here to watch out for. At times, I tend to provide a whole list of candidates, like say 20 candidates, because there's so many great candidates. Right now, not a whole lot in terms of volume, but a lot of good ones in terms of quality. I think these will do very, very well here in the coming weeks, but perhaps even in the coming months as well. All right, everyone, have a fantastic rest of your day. Thank you for joining me, and I will see you in the trading room. Take care.